It's time to give an update on the markets and some of the stocks that we've been watching and crypto. I am Dr. Stock, Doctor of Education, and if your boombox is glaring at you, it might just be a stereo. All right, we're going to talk about SPY, QQQ, wild day today in the market with those indices. I'll toss in IWM, Apple, Tesla, and then also ExxonMobil. I've had people ask me about that. We'll give an update on that one as well. And then Bitcoin, and I want to talk about the play that I put out there on Mara that I announced over at the Patreon today. By the way, if you want to see my buys and sells later, I'll tell you about that Patreon, about my options course, how you can learn how to be a better technical trader. I also have that there for you. In the meantime, let's just take a look real quick at what we had today in the economic reports. Challenger job cuts, only about 35,000 compared to what was forecast of 63,000 as per Trading Economics against 45, almost 46,000 the previous month. So having fewer job cuts and then ADP employment change, which was expected to be out around 115,000, instead came in 164,000. You're like, wow, 50% more. That's a good thing, right? Well, I thought so. I thought that that would be more of that scenario that we were looking for threading the needle for that soft landing. And the market decided otherwise. We were good for a while, and then we sold off throughout the day. And man, oh man, what a turn. And I'll even show you that critical level that I talked about in my morning video. Initial jobless claims, lower than what was expected there as well. So those honestly are pretty darn good numbers, but what exactly happened? Well, if we look at the CME Fed Watch tool, right now it's looking like end of January, almost certain that we stay right where we're at, no rate cuts. Well, if we look to see the change from yesterday to today for those differences that we have from what it said before, we had almost a 10% chance of a cut. Now that's down to just under 7%. And we went from 90% of staying where we're at to 93%. So we saw that shift of about 2.5 to 2.6% go from a possible cut, which would, is still almost perfectly likely that we're going to stay where we're at. But now it's even less likely that we get that cut and even more likely that we stay where we're at. And if we go out to March, we can even take a look to see how that was affected by today's numbers that we got. And you can see it was 64% chance that we had a 25 basis point cut. Now it's down to 62%. And we had a 29% of staying where we were at. And now still pausing all the way up through March. Now that's up over a third of a chance. And you can see we even stole away from what we had. We were at a 6% chance of 225 basis point cuts or a 150 basis point cut. And now we're down to 4.3%. So that's the change that happened. And that could explain a lot of the reasons why we saw the market receive things the way that it did. Would be an adjustment, I guess, from what the bond market is saying about that. So let's put the charts up and talk about what we see in the indices, and then we'll also get into the stocks and then into crypto. So going with the SPY, I marked the critical levels on here. Well, what are we looking at so far? The RSI, still bullish. We're still up above 50. And when we have the moving averages, the 50 and also the 5 and the 13, which is the yellow and the green. Let me hide up some of these drawings here so that way they're not in the way. There we go. You can see the 5 and the 13 more clearly here. They are just touching, but they're not crossing yet. And then also we have the 50 EMA down here that we're still above. So we're still in bullish territory for the SPY, but we are currently dropping down a little bit. Tomorrow is still up in the air on which way things are going to go. We've had a lot of selling off recently, and we have non-farm payrolls at 8:30. So we're going to have to watch and see what happens there. And let me just give you that number quick. I'm not going to switch the charts at this point in time, but non-farm payrolls that we're looking for at 8:30, that consensus right now is 170,000 versus the 200,000 that we had before. So it sounds like we want slightly softer numbers when we look at non-farm payrolls. For tomorrow, that's at 8:30. And we also get information on hourly earnings. We want to watch for that. Unemployment rate is also at 8:30. If that comes in at 3.8%, we might be okay. 3.7%, we might be okay. 3.9 or higher, and the market is probably going to drop a little bit more in the face of that. So just so that we know that 8:30 is going to be a big catalyst for us and probably a big decider on the direction of the market for the day. We're just going to have to watch and see if it's something that, again, serves that soft landing purpose, or if it's something that tells us about recession or possible further Fed hawkishness, either a longer pause or unlikely, but then there's also the idea of rate increase. But like I said, that's pretty unlikely, I would think, at this point in time. I think they pause. I think the next thing that they do is cut whenever that does happen to happen. Although I think March is going to be a pretty darn good likelihood, and even the bond market is agreeing with that right now. So about the SPY that we have right here, it is possible tomorrow we continue to sell off. 8:30 is going to be the big determinant if we continue to sell. Like I said, we're above the 50-day that we have on here. EMA and SMA. We're also above the 200-day. So we're in really good shape right now for the SPY, even if we are settling a little bit. And I said we wanted to pull back and find out where that support was. We haven't found it yet, but we're looking. Look at the critical levels that we have here. We actually crossed through the first critical level, finished just below 367. Actually moved this down to adjust a little bit to be more accurate with what we had in the peaks over here. So this is the daily chart for QQQ tracking the NASDAQ 100. And we actually just crossed down below 50 on the RSI. Today we also have a cross of the 5 and the 13. We're still up above the 50 for right now. Bollinger Bands, we went and we touched those Bollinger Bands. Let me shrink this up a little bit so we can see it. And we started turning things around. This cross that we have, this goes along with what's called the bread recipe by Stockmo. And this talks about using moving averages, momentum, Bollinger Bands, and also a few other things if you want those indicators in there. But through the technical analysis trading course that I referenced at the beginning, and I'll tell you a little bit more about that in a moment. But we do want to keep watching this. The Qs, it is possible we drop further. We have 393 in our sights after that, and then below that is 390. So we want to watch and see where exactly we find bottom. The big thing about 390 is this red mark that you see right here. That is the 50-day EMA that we have, which could most definitely act as support for us and actually cause quite a healthy bounce coming off of that. We're just going to have to watch for it. If recessionary fears start creeping in, we're dropping in the markets. If we have Fed hawkishness coming in where by some weird twist of fate, we either stay much higher for longer, like we stay right where we're at, and we continue that throughout much of this year, the markets aren't going to like that. They're going to sell off. And it's some even weirder twist of fate that the Fed should ever increase rates, like some weird resurgence of inflation that we don't expect. That would also be pretty detrimental to the markets. But not much sense talking about that right now because as of right now, it's not expected. So we'll keep on moving. Into IWM, tracking the Russell 2000, we're right in between the critical values that we have on this, sort of in no man's land, and we're still rocking just at 50 on the RSI. It does not want to move off that value. So we'll see what that looks like. And if we talk about bread recipe for this, from that technical analysis trading course, you can see the 5 and the 13 just smooching each other right now, a little bit of kissy-kissy. And that does not yet confirm the fact that we could possibly sell further on this. So just this is one to keep in mind. We want to see where that settling happens. And we've seen significant settling so far. With that said, let's go to a behemoth in the NASDAQ 100, which is Apple. In the indices, in the stock market overall, $3 trillion company. And we have this line right here, which is a long-term trend line that we keep on finding either support or resistance at, mostly support throughout its existence. And what happened today, we came down and we just touched right on that line and bounced back up. The 200-day is also a place of pretty strong support for us for Apple. So this is a good likelihood, especially because we're down near this oversold territory, which there we can see it on the screen a little bit better. The oversold territory on the RSI. Apple doesn't usually stay there long. It sometimes hesitates, doesn't necessarily drop a lot. When it gets down to oversold, and you can see if I go back through history, there's barely a time that it really stays in that oversold environment very long. I think Apple's setting up for a decent bounce for us. We're just going to have to watch and see should we get that bounce. And if we get good news on consumer demand, that's going to be something that's going to allow Apple to recover significantly well. Moving over to Tesla. Tesla, still in bearish territory on the daily chart. Tried to rally today, came up, touched the 50 EMA, which I said was going to be resistance for us, and it was. We're still above the 50 SMA that's on here on the daily chart, and so we're going to have to keep on watching this. If we need to break it back up above that 50, right now all signs pointing bearish that we can see so far, breaking down below this trend line for Tesla. So it is possible that it sells a little bit more for us, but we are still above the 200-day, and that is a bullish sign. So that is the one that I can see right now that is not pointing necessarily bearish for us. I guess another one would be that we haven't quite beaten this low that we had over here yet. If we take out that low and drop down below that, and where was that candle open? That candle open was 236. The low of that candle, though, if I put my cursor right on it, was 228. So we actually have to break down through that 200-day. That can be pretty darn bearish for us. So we need to watch out for that for Tesla. And then the last one that I said that I would talk about out of these anyway was ExxonMobil. Look, we broke the descending wedge. We came back and we retested the top of it. We rocketed right back up and then just had a little bit more weakness today. This could be a volatile story as we continue back up out of here, maybe possibly getting a bit of an inverse head and shoulders. And maybe that's the thing that allows us to finally break up out of this bearish trend that we've been on for ExxonMobil. So right across here. And then you can see that we actually had a little bit of volume spike, not quite what we had back here, but decent so far. And we found resistance right at where I had my line at 104. that's most definitely a line to break right across here, I would say. Even better than the one that I put on here initially. As a matter of fact, I'm just going to delete that off. Boop. All right, perfect. So that's ExxonMobil, and if you guys want to see how I am playing this market, by the way, you can do so by using the link down in the description for the Patreon. You can see my buys and sells over at the Discord, you can talk to me, and you can get access to my options course, which is over there right now, and I'm building out all the time technical analysis course. If you know more about technical analysis and really up your trading game, you can do so using the link down in the description for the Stock Mode Trading Academy. So go ahead and check that out. I have contributed some videos to it. They should be uploaded and included in the course very soon. I'm very excited about the options content that Stock Mode asked me to include, and I think that you really like what you see over there. All right, let's get back into the charts. We'll put this back up. Let's do a Bitcoin update. Bitcoin today, we had quite a rally. Where did we peak at this thing? On this, we peaked at 44,731. The low today, woo, put us right back on this bottom trend line that we have right here. So we peekabooed outside of it a couple times, keep on coming back right inside of it. Definitely by the close, like this one right here, where we came down and sold so low, but then sprang back up. So I think this is a really good trend line to keep on following leading up to that Bitcoin ETF decision. And we are squeezing on this 44.3. You can see it still acted as resistance for us as this candle plays out right now. It's still acting as resistance. So we need to break up above that to continue that bullishness. The biggest decider of that bullishness, by the way, I'm going to keep putting it out there, the decision. As we get close to that decision date, the closer we get, the more pressure, I think, downward pressure we're going to have on Bitcoin. So I don't think that we've seen the last of the routes yet. I think that fear, uncertainty, and doubt principle and selling the news is going to hit before the decision does. That could possibly be wrong. So we're going to have to watch and see. January 10th is when we should get that decision by. And I do think that approval will cause Bitcoin to skyrocket. And I do think that disapproval or getting shut down again is going to cause Bitcoin to tank pretty hard. And for those reasons, here's Mara. So for Mara, what I did, instead of picking a direction on this one, I actually just straddled this one. I took a $26 strike for a put and a call, I should say. $26 for the long call, for the long put. And so now it's a volatility play, and $7 in either direction will be a guaranteed profit for me. Anything inside of that, and the time value is going to bleed away real quick because it's a short-term expiration because I went with January the 19th. But this is one that I told you I would tell you what I was deciding to do about it. I posted it over in the Discord, link down in the description for the Patreon. Go ahead and sign up if you want to. We'll see how this one plays out for us. I think that it could end up playing out and paying out pretty handsomely, regardless of the decision that we would get. Now, if we get a huge run-up in Bitcoin's price prior to the 10th, and my call ends up being profitable to the point where it covers the premium that I paid to get in the straddle in the first place, I could most definitely take that profit on the call and hold on to that put for disapproval and then turn it back the other direction and profit on the way down as well if we got a disapproval coming out of it. So that's something I thought about. There's some flexibility that I wouldn't necessarily have to close out both legs, the entire straddle at once. I could close out one leg and then close out the other leg independently if I wanted to. And those are just some ideas that I kick around about it, and, you know, watch what shapes up and kind of play it as it goes, rather than having always a hardline plan for entry and exit. Sometimes it can help to be a little bit nuanced, even if it's a little bit hard to talk about in a YouTube video. So that's what I have for you guys. Keep watching those indices, keep watching the momentum, watch for those moving averages. If you want to know more about technical trading, get the link down in the description for the course, and look for my options videos that I put out there for Stock Mode to also hit that course. I think you'll really like the content that's in there. And then also the Patreon, if you want to see my buys and sells and be part of my community, that link is also down in the description as well. As always, guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.